Welcome back to Market Day Report. Tommy Grisafi sitting in for Tony St. James, who's probably celebrating America somewhere in this great country that we have here. Let's celebrate with corn being up. Let's get to the corn quotes here. Look at that. September corn up 1.5, 407.5. December corn 423 up 1. Going all the way out to the May 449.25. Soybeans had a good overnight session, and let's see if they're holding it here during the day. A nice looking soybean board here. August 1038 up 8. September soybeans 1026 up 7. November, that's pretty much what I consider front month. 1033 3/4 up 6.5. Let's head over to Chicago. We have 3 different wheats we trade. We'll head over to Chicago wheat. SEP 553 3/4 up 4.5, 4 3/4. December 573.5 up 4 1/4. Kansas City wheat. Let's see if it can get on the train here. SEP Kansas City 536 1/4 up 5 cents. December 559 3/4 up 5 cents. Spring wheat. Confusing here, but I'll explain it to you. Spring wheat's trading in several places right now. The CME has a contract in a Miami exchange, which had bought the Minneapolis exchange. 637 up 8. I think that's going to make some farmers up north happy as we're starting to have a nice little rally here in spring wheat. 655 over in that D's up 8. Cotton, can it keep the trend going here with this up board? I think our next guest will probably have some reasons on why commodities have a bid today. Cotton 68.19 up 51. December cotton looking at a 68.66. Let's bring him in, a friend, Todd Horwitz. Todd, good to see you, my friend. I like that picture behind you there of the Board of Trade. Spent 20-some years going to that building every day. Wonderful memories.
It was great to be with you, Tommy. And yeah, it is. I went there for 35 years. So yeah, it's a great memory. And unfortunately, our grain markets are giving us more nightmares than memories, although they're higher today, which you'd expect. You know, this is pretty typical before July 4th, before the holiday, that you get a little bit of a rally. But basically, they've been range bound since February. And we've been, we run to the top of the range, we run back to the bottom of the range. And the weakest right now has been corn, which is bouncing nicely. But again, it was higher this morning. It's given back some of its gains. But I do expect the markets to be higher today, tomorrow. But we'll see. Anything goes, because we have not been able to catch a real bid in these grain markets for quite a while.
Yeah, and of course, so many of us still own seats and memberships. You see our little memberships have a bid to them, kind of nice here. Maybe something coming down the pipe, we'll see. But that's for insiders only. We're all trading, we own seats at the board. We all have trading accounts, but I don't have to trade corn. If I see that gold ticket busy, I'm right over at gold. If I see crude oil busy, I'm over at crude oil. Explain to our viewers and listeners how these outside markets are so much more exciting, Todd.
Well, they're catching a lot more action and a lot more of a bid, and they do trade basically almost 24 hours a day. So there's always opportunity. And of course, we've had really some wild swings in the crude market. I mean, if you go back to last week, we were at $78 a barrel. Now we're back down into the mid 60s. And I expect them to go even lower. I mean, again, if President Trump does what he says he's going to do and wants to drill, then we're going to see crude oil back in the 50s, if not the 40s. And I think that's good for America. That's good for people. That's good for the inflation. And gold has had a nice solid bid for a while and pushed up to 3,500 and certainly should come down a little bit here. I'd look for 3,000 to be a buyer again, but gold's a great inflation fighter. But what gold is telling you is that inflation is not coming down. And one of the key components is going to be crude oil. We need crude oil to come down to really take a bite out of the inflation that we have, since 80% of our economy is represented by fossil fuels.
Yeah, real quick before we go on break, I was out to dinner with a friend, and he said, how could Bitcoin be worth anything? It's not real. And I said, well, tell me about the American dollar. At least Bitcoin's not 33 trillion in debt, correct?
Listen, Bitcoin is a great currency, especially for the libertarian part of the world, because there is no central bank intervention. There's nobody creating new debt. And that's the beautiful thing about the cryptocurrency world.
Yeah, stay right there, Todd. We're going to take a little commercial break. Keep the lights on here. We'll be back with Market Day Report right after this break. Welcome back to Market Day Report. Let's not waste any time. I think we got a little cattle rally here. Like I said earlier on the show, I wouldn't be surprised if they traded back to unchanged or up on the day. August live cattle, 209.60 down 115. October cattle, 206.72 down $1.07. December live cattle 207.07, down 127. A lot of 206s and 207s in that live cattle board. Let's see if feeders are bouncing back. Feeder market was down about $2 earlier, and we do have a recovery. August feeders 304.92, down $1.10. Sep feeders 304.37, down 127. We'll go out to the Nove and Jan 299. That's the first time we start to trade below $3, down 162. And Jan 293.42, down 160. A little more strength in the front. Again, the incredible fundamentals in that market. Hogs have been on a nice bull run, but it feels like they've pulled back the last few days. July hogs 108.52, down 47. December hogs 83.20. I want to bring Todd back in. Todd Horowitz, Bubba Trading. We talk meats, but we can go right back to the outsides because I know you're an absolute expert at that, my friend. Stage is yours.
Well, I mean, again, the outsides, the equities continue to rally, and again, this is what I would call a retail rally, Tommy. There's not a lot of hedge fund or those types of participation right now. We've got real light volumes, which it's holiday week anyways, but we've been light for quite a while. I think that the big money's waiting to come in and slam these markets. You see job layoffs all over the place. We had an ADP jobs this morning that missed again. You had Microsoft laying off help. I want to know who's going to be able to buy all this cattle at these high prices. Who's going to feed everybody? And again, I think the outside markets are pretty much getting close to a reason to sell them. But again, don't fight the tape. Don't force yourself in. But at some point here, they're going to reach a pinnacle, and that'll be the end of the equity markets for a little while.
Yeah, real quick question. Unemployment's always on the first Friday of the month, unless the first is the first. And but with the holiday, I think we're going to have unemployment on Thursday. Is that correct?
Yes, sir. We're going to have it tomorrow, and I would assume it'll be another miss. We're not counting for all these layoffs and things we've had in many of the places across the globe. We're not seeing good employment as much as we'd like to make out of the big, beautiful bill and what's going on. Listen, the bottom line is it's going to add $3.2 trillion of debt, which we cannot afford. And this is where the Fed comes in with the interest rate market and trying to manipulate these rates versus letting the free market trade it, because interest rates actually should be higher than they are now because the free market says so. But the Fed doesn't care what the free market says.
Yeah, just walking around here in Nashville, now that I live down here part-time, a lot more for rents, a lot more few months free on an apartment. I heard of one construction project that halted. How is the housing economy in Las Vegas?
Well, they keep building, but again, they're making deals on mortgages, Tommy, which is, to me would be something concerned about if you're in the markets, because when the going rate is 7% for a mortgage and builders are offering 3.5% and 4.5% for mortgages, that tells me that they're worried about their inventory and that there's a problem coming. And I do see that problem coming, because you cannot keep putting out, if you're going to have to pay higher and put on a losing bid offer spread for interest rates for yourselves when you're becoming a builder.
Excellent. Todd Horowitz, Bubba Trading. Todd, great perspective. I knew you would have an interesting spin on that. Thanks, my friend. Happy 4th. Hand it back to Tammy.
All right, Tommy. Yeah, good information as we watch things unfold here over the next few days between the holiday and everything going on in Washington, D.C. It could impact the markets.
Absolutely.
Yeah.